Hey there. Okay, we're going to be using the Fibonacci tool over the next video or so. Okay, and we're going to be talking about like the Fibonacci retracement, the Fibonacci arcs, the Fibonacci extensions, the Fibonacci time zones, and so on and so on and so on. There's quite a few of them that we can go over. All right. Now the purpose of the Fibonacci tool is that I've already got one up here prepared for you already, is to find areas in the market where it's going to reverse. Alright, and we can use the Fibonacci tool to plot out target zones or to plot areas on the chart to find the impulse and corrective waves with Elliott wave analysis. Okay, and with the Fibonacci tool, there are two main common areas where the market will stop and reverse. And the first one, well, the retracement level really is the 38.2, the most common one, and the second most common one is the 61.8. Now, the main rule is that that the market should retrace back around about 61.8% and then decide to go wherever it needs to go afterwards. Now, generally, if the market comes down 61.8%, you should see this go all the way up past this point. All right. Now, the reason why I say that is that I'm going to just do a little cheat here for the moment, just give you a brief introduction into Elliott wave analysis. Okay, this is point 1, this is point 2, point 3, point 4, and point 5. Alright, without getting too technical, this area here is supposed to equal around about 61.8%. And when it does, it will go ahead and form a wave 3. Okay, now the retracement of wave 3, most times, more often than not, is around about 38.2%. It won't be 61%. It won't be anything larger than that. It will mainly be around about 38%. Okay, so when you see a retracement down to this 61.8% level and then bounce off of it and not come back and revisit it, then you know that this particular area will be the start of that Elliott wave analysis. Okay, so with that said, let's just move this out of the way, and you can see that the market did come back and it reversed and it hit the 61.8% Fibo, and then it's tried to attempt higher levels. Unfortunately, it didn't succeed. Okay, it's basically failed at the 38.2% area, and it just kept on going. And what we see here is basically it's broken the 100%. So what we see from this move to this move is a 100% retracement. Now, when you see a 100% retracement, you can then use what's referred to as the expansion tool. Okay, and the expansion tool will allow you to predict areas in the market that the market will come down towards and stop. Now, once it reaches the 100% line and it retraces, like say for instance, this is our uptrend, okay, from here to there, and if it comes down to this particular level, which is 100% a retracement. Okay, now when you see 100% retracement, you will see quite often that these expansion levels, the Fibonacci expansion, will come down to like 127, which is a nice area where normally you can retrace and go back the other way. The next one is 38.2, and the next one is 61.8. Alright, and these are all of the extensions. Well, it should be 1618 and that should be 138.2. Okay, and yeah, and then when you see this, when you see the market come down and hit this level, be prepared because it might go back up the other way. If it doesn't and it comes down and hits the 38.2, be prepared to take the opposite trade. If it doesn't, it keeps on coming down. You may even want to look at the 50 level as well. Okay, and also be prepared at the 50 level that it might go back up. If it don't, 61.8, but it'd be very rare to actually see it come down more than 161.8. Alright, at least for the short period, at least. Maybe for the longer period you will see a lot larger levels on these. Alright, so let's just give you a couple of examples of what will happen when we're actually trading the market. Alright, let's go back to the very start. Okay, so here we can see, like, if we got a bit of resistance up here. Okay, alright, so the market's dropped suddenly, come down to here, and then it's come up to hit to this resistance zone and it's stopped right there. Alright, Now coincidentally, this is actually a supply area. Okay, and we'll get into supply and demand a little bit later. So anyway, this level was actually respected and it came back down. Now by rights, this level down to here should be around about 61.8%. Alright, so let's go and take a look at that. So I'm going to take my Fibonacci tool from the point of the low to the high, and oh look, we actually see it come down and hit the 61.8%. Now the next thing on my mind, okay, is that once the market breaks and goes back up, alright, my main concern that I'm going to be looking for next is the break of this high. And if the break of this high has been confirmed, then I can start plotting. I'm trying to stay away from actually saying this. Actually, keep getting into Elliott wave analysis because that's a video in itself. All right, but my process would be that once it comes down to 61.8 on the first move, then I will know that once this wave has been broken, okay, then I can actually prepare an area where I think wave 3 will be. Now wave 3 will always be the longest wave out of all of them, okay, and it will be a 161.8% more than the move of here, so then I can project where this is going to end up. Alright, so then what I'm going to do is I could get the Fibonacci extension tool, and basically there it goes there, and you can see now the 161.8%. Alright, so what we got here from here is 61.8%, and the distance from here to there, okay, is 100%. So when you add the two together, alright, this distance from here to there should be this distance from here to there, but sometimes it's not always going to be bang on perfect. You have to give, take it with a pinch of salt every now and then, because the numbers won't always be perfect, okay, so there's going to be a little bit of an allowance in there. So now I can go, okay, well this area here is going to be 100% of that move, and I will get my crosshair tool out and I will take it from here to there to work out what the pip difference is, and then I'll just basically add it again, okay, to give me my target area. Alright, now see how this actually came back down to 61.8%. You might not actually see this come down to 61.8%. okay, you might actually see, let's just take that off, you might actually see the Fibonacci come down to the 38 level, which it tried. I mean, it went there and it went back up again, but it's come back and retested the lower levels. But if it came down to here and then moved up again, I would know that this move here would be wave 5, and this would be wave 4, and this would be wave 3, and that would be wave 2. Okay, would be wave 1 actually, wave 4, 3, 2, and then the other one will be over here. Alright, so let's go ahead and take a look at some other areas in the market where it's basically where things have basically retraced. Okay, here is another area. We can be taking a look at some previous resistance, okay, around these areas here, and you can see how it got respected again. Alright, so we can take our Fibonacci tool out and take it from this low to this high. Alright, and now we can see that once it breaks, if it doesn't stop at 38.2 and 61.8, you can be pretty sure that it's going to come down to at least 100%. And if it breaks the 100% mark, then you can safely target around about 127 to a 161 retracement. Now in this particular example, okay, we've got the 161.8 there, but we've also got a 261.8% right there as well. So essentially the distance from here to here is tripled itself. Alright, there's 100%, there's another 100%, that's 61.8. So it's basically, yeah, so we've got 261.8%, which is basically about right. Alright, so yeah, so there we go. So then we can basically target new lower levels. Once it breaks here, we can target 127%, and then we can target the 138.2 and so forth. Now if you don't have the extra numbers on here, what we can do is essentially right click, basically double click on it, then right click, choose Fibo properties, and in here you can actually start adding your own levels in. Okay, and here's your adds and your defaults, and you can actually reset everything back to defaults if you're not happy with the current settings. Now all we could need to do is put in some numbers in there. Now if you wanted to have like a negative area, if you don't want to use like the Fibonacci extension, then we can actually go ahead and use this instead. So we're going to type in 0 first, and then 127. Okay, and then I'm going to type in minus 127.0. Click on OK, and you can see now that there's a minus 127 level on there. Okay, I'm going to go ahead and right click, choose Fibo properties again. I'm going to go ahead and add another one. I'm going to do minus 0.38.2. Oh, it's not, can't put a second point in there. Okay, and then I'm going to type in minus 138.2 here, and I'm going to add another one for a minus 0.1618, so 61.1.8, and then I'm going to do a minus sign in here and type in 161.8, like so. Alright, so now we don't really need to get the Fibonacci expansion tool out, because we can actually use these instead. Alright, now I'm going to put some more Fibonacci levels in there, because I want to see how far basically this will come down to. So I'm going to type in a Fibonacci level of 1. Let's just double check. Okay, 61.8.161. Right, okay, so I'm going to put in 127 in here. Okay, and 127.0. Let's see if that come out. Okay, yeah. Okay. Alright, that's the 127. That's the first level of a retracement when you see the 100 retracement level being broken. And then we've got the 138.2 level. So we've got 138.2. And then we've got the 161.8 in there as well. So that's okay. Alright. Now if you want to see these where the numbers, where the prices are, we can go ahead, right click once more, and then what we can do is in the description areas do a few spaces, alright, and then hold down the shift and do the dollar and percent symbol. I believe it's that one. No, it's the other way around, my bad. Okay, it's the other way around. Do the 0.00 and the dollar symbol. That's the percent symbol and then the dollar symbol. Alright, and that will give you the actual price of the where that particular level is. Now what you might want to do is do a few spaces, okay, and copy all the way up to the end of that figure there and put them on all of them. Alright, and this just gives you This gives you an extra visualization on what the price is at those particular levels. So then you can use those as, you know, as a way to find take profit levels or stop losses and stuff like that. Alright. Now I use this the Fibonacci tool quite a lot actually, and it's a very powerful tool. I mean, if that Fibonacci guy was still alive right now, he would absolutely make a killing with the Forex. Alright, so there we go. And there's all of our prices put in there. Now, we don't have to, see how this is actually expanded out. You don't have to have these numbers, you know, so close. You can actually go into the Fibonacci tool, and I believe there's a fan parameters, there's the ray in there, and what the ray will do is it will keep on extending these out as far as it will go. Okay, so it will push it right towards the end. If you only want it to be at a certain length, then you take the ray off, alright, and you can move it back to wherever you want to move it to. Alright, so that's the Fibonacci tool. Alright, it's a pretty powerful tool, so play around with that, and just remember that when you're wanting to find a retracement when it goes up, take it from the bottom to the top, okay, and when the market's coming down, you take the Fibonacci tool and take it from the top and from the bottom to find out how much it's going to retrace back and go back the other way. Now you see how this one basically came down to here and retraced back to that 23.6% Fibo. Right, well that's a reversal area in itself. It should really come up to here to confirm, but it didn't confirm, it failed. Alright, and it's just dropped. Alright, and then you can go ahead and use your expansions after that hit. This one is your first target, then this one is your second target. Alright, so I'm going to leave you with that video, okay, and then we'll move on into some more easier tools with the Fibonacci that we can use. Alright, okay, so I'll see you in a bit. Bye for now.